What is up, everybody? Logan here again with Halcyon Trader again. We're going to jump into his play for the week, and we can go over any questions you guys will have on this video after. Make sure you guys leave a like. Also, consider subscribing and leave a comment below, as we're going to donate half the ad revenue from this video to a charity, and I'll let you guys select that as we get closer to the day. Leave a like, and let's talk to Halcyon real quick. How are you doing, my man?
Doing well. Thank you. How are you?
I'm doing pretty good. Pretty good.
Awesome. Yeah, so we'll talk about the pick of the week this week, or rather our trade of the week.
Yep.
Which we started putting on yesterday, and I got filled on it this morning, and want to talk through a couple of versions of what you can do with that one. Again, for those that are either A, just checking out what we do now, or B, not super familiar with how these kind of trades work, maybe not a bad intro into them. Mm-hmm. This is not meant to be an aggressive growth style strategy. I don't, for this kind of trading, this particular account for mine is not that. I'm not interested in trying to grow super aggressively on this particular account. This is more of an income generation, which typically means the more you reduce the risk out of a trade, the less reward you can expect. Mm-hmm. Right? I mean, that's just kind of how it works on virtually anything with markets. You want no risk, then you get no reward. And so in this case, we're kind of threading through the middle of this. It is a shortened week this week. Markets close on Thursday and are not open on Friday. So we have one less day available due to Easter, or Good Friday rather. So this week, the trade that I've looked at was trying to take a little bit of advantage of what we've been having going on in the market. I'm looking at the 1 hour, which is how I like to set up these shorter versions, the week of style trades. And really what we're looking for is, do we really have any edge? What's going on here? In my opinion, again, you can spend as much energy as you want or don't want on this kind of thing. But in my opinion, when we get into the zones that are down here, I feel like I have an edge. And if I get up into the ranges up here, I feel like I have an edge. Anything that's in the middle of that, to me, doesn't scream that I have a very good predictive element as to what direction we're going to go, other than I feel like we're probably going to be chopping more sideways-ish action on that. Again, top and the bottom of the channel is a lot easier for me to pick more likely which way we're going to be moving from that point. Mm-hmm. And so we'll do a little more aggressive things. We'll be a little more further out in front of price, or we'll set up some bigger calendars, sometimes triples or quadruples on it. In this particular case, because it's a shortened week, and we're looking, literally at this little time frame here for the next 2 days, essentially tomorrow and Thursday. Essentially, what I'm trying to do is, do I think that the general tone of the market is going to be sideways to slightly up? Yep, that's what I'm guessing from here. Then, typically holiday weeks are a little bit lighter trading. Usually, we don't have as much wild movement on them, and so I'm just trying to get a little bit of whatever this price action is here, right? Somewhere in this range-ish here. So kind of like that 39.55-ish range, upwards to about 39.75, 39.80. Mm-hmm. That's kind of my goal. So as I'm looking at these, I'm saying, how do we structure something to take advantage of that? Our VIX, of course, is where we always start. Want to see what's going on with the VIX. So we'll see a quick peek. What's that doing? VIX is at 19.6. So pretty good decline in the VIX today, actually, negative 5%, which is fine. That's a ideal range for us on what we've been doing with these. So then we go over to the trade setup here, and we're doing a week of expiration. And there really was kind of two ways to look at this. Do we want to do a calendar, right, which is going to cover, in this case, I would start one up being slightly bullish leaning. Right. I don't think that we're going to get to the 4,000 range. We actually tried to put this on Friday, later in the day on Friday. It was going for $3.30, this exact particular trade. Mm-hmm. And the market ran away from us before we got it on. We threw the alert out there, but never got it on there. And then on Monday, it opened up at $15.20 at some point. It was probably for about 4 hours, trading for about $15. Jeez. That would have been a nice triple had we been able to get into the trade, but we didn't. So we're sitting here, and in my opinion, I don't think we're going to be sitting at this place right here, at the end of this by Thursday. Yep. I'm doubtful we're going to be sitting at 4,000. Not that it's impossible, but just not seeing it. And the other reason why that I picked for the extra we're doing is I don't feel like dealing with defending this down here.
Yep.
You know, you see the slope kind of goes out pretty bad.
Yep.
And so I didn't really feel like spending time with us defending this particular position if we had to, just because we won't have time to do it. Right? When we're week of on anything, you're trading off two elements, right? You're trading, you're bringing in the possibility for more reward when we're on the week of expiration. But in turn, we are trading off where there's a little more risk, but more in particular for me, which I care more about than the risk side of it in this particular instance, is I don't have any time to defend it in a way that I think that I could actually get out of the trade appropriately. So that then for me becomes a little bit more, well, what's another way to skin this that we can still get some exposure, but limit some of our downside? You know, and that for me, when I'm saying how do I limit some downside, is I look at diagonals then to do that. These are the cousins of calendars. They probably more almost like brothers. They're so close in how they're structured. There's just a teeny tiny difference where instead of looking at them as they're the exact same strike price, right? So the exact same strike price, they're slightly different on their strike price. Otherwise, same thing. You know, you have a long leg and a short leg, that different expirations. And instead of a calendar being the same strikes, on a diagonal, they can be different strikes, right? And that will change and tilt the way these work. And so they give you an opportunity. That's the key word there. It tilts the trade a little bit. So you're, again, going to take some of the risk off when you tilt it to an extent, especially if you think you have a good edge as to how far it's going to move. And then what it'll allow you to do is try to take advantage of that without having as much downside risk. So let's look at what that shape looks like. So here's the normal calendar we normally would have done. We tried to do this on Friday for this upcoming week. We didn't get filled, and then it ran away. It would still be a decent trade right now. I mean, had we got filled at that 330 mark, it'd be still solid. Yeah. We said a pretty good return there at that point. But it was up $15 to $15 on Monday for a little while. So here's the diagonal, right? So now we're looking at giving ourselves a different kind of runway we're going to work with here. Right now, I'm less concerned about downside. I'm actually capped on my downside here. So the worst I can lose in this trade is about $500 if we set this up here, right?
And that's because you have five contracts.
5 contracts. Yep. So each contract's worth $100. You can lose $100 on this per contract. Okay. So but I'm locked in there on the downside, right? So my opinion is, when we're looking at the charts, is that we're probably to keep drifting a little bit up here. That's my guess. We're just going to keep slowly drifting for the next couple of days. But that the probability of, if we had one big move one way or another, I would take a guess that the probability would be we'd move actually more down if there was going to be a large move versus moving way up. And I mean, I think we have lots and lots of resistance on the way up. So when I looked at this particular trade and said, how do I want to go about tackling this? I really like that I had a nice positive theta. Notice how my purple line here, my T+1 line, is above the 0. You can kind of see that. I wish I could zoom in a little closer. I'm sure I could, but off the top of my head, I'm drawing a blank on how to do that on toss, other than, you know, stretching this out like this a bit. But if you notice, I'm a nice positive, you know, theta here, so that if I'm moving forward or backwards, I'm not actually losing money in this trade. And then basically for the next 2 days, if I can get this to sneak into somewhere around here, say 39.80-ish range, 39.90, somewhere in that ballpark over the next couple of days, we're going to be looking at between $1,000 and $2,000 of profit on this trade. And it's a pretty inexpensive overall trade. It costs us $1.10 to $1.15. Somewhere between, we're looking at $1.05 to $1.15 to get into this thing. So $500-ish total to get into the thing for so maybe 3 times return on this, maybe 4 times return, depending on how that works. And if we somehow in some miracle here land directly on 4,010 at expiration, then we'll be looking at more like 5,000 to 5,500 on this trade. So not bad for a 10x on a $500 trade.
Not bad.
Worst case, we lose all 500 we put into this thing. So the reality is, on this particular trade right now, the reason I did that is because, one, it gives us a tiny bit more room to be flexible in the defending. 2, I'm going to give myself, I'm slightly more, I think there's like a big move happens, it's probably going to go to the downside, not so much the upside. But just in case it does, I'm giving it room on both ways. And really, tomorrow is probably going to be the make or break for this trade in terms of, does it do what it needs to do? Does it get going to the place it needs to get going to? Which is, if we can get it just to sneak a little bit into this range, then we'll be fine and we'll make it profit. We'll probably take $500 in this thing. It'll be pretty easy. A couple of days of doing nothing and taking $500 in the trade for the limited amount of capital putting into it. But if I can get it snuck into this range, we'll be sitting in that spot that we're looking for. I just like the risk reward setup here. And I didn't think that we really needed to take this kind of risk on this. Like I said, we tried to put this on when the S&P was around 39.30, 39.25-ish, and it just took off running at the end of the day on Friday, and we just were unable to get filled. Yeah. Mark was being a dick as always, not filling us up. So
he's been like lately. It's been crazy.
He has. Mark is typically deciding, no shares for you or no contracts for you. So that's basically the gist of why we set this up this way. We just really want to take a little bit of the any time you're doing a single one, you can always look at, do I have the diagonal or the calendar version of it? If we wanted to stretch this out a little further, or 30, you can keep tilting it more. There's lots of different ways to keep adjusting this thing around to play with what your max loss, max profit is on it. If you flip this around, actually, so let's make this like 39. Actually, no, go above the price, make this like 430. So then you can play an interesting thing like this, with the price. Obviously, the price would be the same thing as that. It'd be a little different. But you could then do it where we're opposite, where we're not worrying about, blowing out the top end. Now it's more of a downside trade, and it's very much a bullish leaning version. Thought it'd make a little more sense in the way this is set up, is just to give ourselves kind of basically a neutral type trade. Depending on how you structure these, there's certain times where if you're playing around with these and watching them a lot, you can sometimes get them to be that they're a zero. It would, like, the downside is nothing. Like, you can't lose anything on the downside. Mm-hmm. And then your only risk is that you explode through the body of the trade here, and then your VIX falls out from underneath you. Then you couldn't lose when you're back over in this range on that. But I really do not think we have anything going on that's going to blast us past 4,000, in this case. Yeah. 4,030. I just don't think that we're going to see that in the next 2 days. I agree. But this market's crazy, and who knows? I mean, it's done local crazy things for the last, feels like the last 6 months in particular have been just a very manic, wild market. So I like the trade. Feels like it's a pretty solid risk reward. Gives us a decent amount of theta, so we're not paying to sit in the trade. Which is always a good thing. I like that. We always like that ability to be able to watch a trade for a couple of days. So if we're wrong, and guess what, we're going to be wrong pretty regularly on these things. Nobody has a crystal ball as to which direction the market goes, but this does afford me at least a couple of days, and at least maybe not a couple of days, but at least watching good 20 points this way or 20 points this way to see if I'm right on picking the direction. And I do like the calendars for doing that too. I just wouldn't do this week of expiration unless I had a catalyst. For example, like price was, more in this range somewhere, and I had maybe some kind of momentum, change. Like I'm seeing momentum coming up on RSI or something like that. I have some other thing that's pairing with this. Yep. But when you don't, you pick your shots. It's sort of like how in my opinion, at least how I like to trade is I'm picking my shots as to when do I want to size and when do I want to sit back and just do some of the boring, income collecting stuff. So yeah, that's the basic gist, man. So what questions do you have on any of this? If there is any questions, I mean, we've covered quite a few of these. This is just another way to play the same kind of income side of it. Like I said, you're not going to knock your socks off and retire on a $4,000 potential trade, or even really, I'd be happy if we get $500 out of this thing to $1,000. I think that's appropriate, realistic possibility, and that'll definitely happen if we get up in the 39.70 to 39.80 range. And I think we have a good shot of making that take place. I like to think that whatever direction the market's going, that's the momentum it wants to keep going. And until something, comes out that's not completely expected, you're going to probably see it continue to try to work its way that direction. And we're biased to sideways to slightly up right now. So that's where I'm playing. That's the play for this week.
So the two questions that I had, which I would think that other people would have these same ones. The first one I'll ask you is how often you take this style of trade.
Oh, great question. So that all depends on what our charts are doing.
Hmm.
I have been more recently, probably the last, as you keep adapting and trying to adjust your trading style to fit what the market's personality is doing. I've been doing a lot more of the single directional calendars or diagonals when we get into these bottom and top channels.
Hmm.
And those have been working very well for us over the last 4 or 5 trades that we've done with those specifically.
Hmm.
We're still doing the doubles and triples and quads, but the single calendars directionally moving into them, man, when you get those correct and you have some kind of other confirming trending indicator or whatever else you like to use for that, they are incredibly lucrative from a profit standpoint, for really not taking a ton of risk to go take a swing at. Like I rarely, if ever, will do just straight up long calls on something or naked calls on something. To me, this is like a poor man's way to do a naked call. Yeah, you're capping some of your upside risk or upside reward for sure, but I'm also putting theta positive in my favor when I'm doing them that way, and that way it gives me a couple of a day or two or sometimes 3 days to be able to watch and see if I was correct on picking the timing of that trade.
Hmm.
Again, I don't want to spend all my entire energy and life on trying to figure out the exact direction the market goes on every tick. That's a futile effort to do that. But I do believe you can put some edges in your favor, when you get in some of the bottom channels that I like to use or some of the top of the channels. You have the probability shift a bit that it's going to move back the opposite way. And I want to try to take advantage of it. And if it's a cheap way for me to try to take advantage of it too. Plus, then I can defend if I'm wrong, and I can make it into a double or a triple if I need to, and then we just go from there. So there's that question. What else you got?
The other question that I had is more, I guess, for an account sizing standpoint
Yeah.
of, what makes you, for your specific account, what makes you comfortable with being in with about $500 versus, some people are in with one lot, right? Just a $100 or 105 right around there, right? And why also, I know you run a lot of your calendars at 10. Why did you choose to go with less contracts this time around? Is it because of the shorter time frame, or are you just going to reiterate on just because it's you're more guessing the direction?
A couple of things. I mean, on these kind of styles of trades,
Hmm.
you know, you've got to. It's kind of thing. One, I'm just comfortable with how these work,
Hmm.
and I'm comfortable with how to work myself out of a jam if I do get in a jam on them.
Hmm.
And so trading size wise, no, is again 5, 10. I'm using 10 or 5 as just a round, simple number for people to grasp onto. If I'm putting an alert out there, I'm usually saying just one and then referencing, size to your appropriate account and what your experience and risk that you want to take on these is.
Hmm.
For this particular account that I'm doing, which is just the income stuff, I'm that account between 10 and 30 contracts is going to be pretty appropriate for the size of the account and for what I'm going to take on the thing, in terms of what risk I'm willing to deal with on it. Now, with that said, this particular trade, I'm doing 5, and I was trying to get more shares of it today, or contracts, or save more contracts today on it.
Hmm.
I don't think I got filled. I'll have to check, the system in a minute later on here, but I was trying to get up to 10. Really, I would probably take 15 or 20 if I get another discount on it, but we'll see. Again, what I would say is probably number one is if you're not familiar with trading these or if you've never done them before, start small. I mean, there's no faster way to get shaken out of a position is oversize and not understand how it moves or works. And that'll be the curse of your trading if you're getting into something you don't understand how it works, and then you're going in with any kind of size that feels really uncomfortable to be in, because there's no faster way to just exit a position for no logical reason than you don't feel good in it, and mostly because you don't understand why you're in it or why it works or how it works, and then you put too much capital in. So always start with just one. I mean, this one is going to cost you literally $100 if we are dead wrong in this. It'll cost $100
Hmm.
on this. On the downside of this, on the upside, yeah, it's going to be worse than that. But if we're going through the body of this trade, we're gonna have time to get out with a profit before we get to that point. And honestly, I just don't see us blasting up at 4,030 by 2 days from now.
Yeah.
So don't think we have a catalyst to do that at this point. So again, like that's it. Was this particular one. It was just there was no real reason why I went 5 or 10 on this, other than just that's nothing on the account side for this, but also at the same time, I don't feel like I have like a super amazing edge, which is why I did more of a diagonal on this, which is limiting downside risk on this particular trade. Just don't really think I have I don't have. It's not like a picture 5-star type setup for me,
Right.
which is fine. I don't really. There's nothing wrong with that. It's just when you get those setups, you be a little more aggressive and size in more. And when you don't have the setups, then you just go to the simple stuff and keep it simple until you wait till the next setup shows up.
Fantastic. Well, that answers my 2 questions that I had, and I'm looking forward to entering the next one.
Cool.
We got a little other things we've been trading, so I haven't had my
Yes,
funds
we
ready to
do.
go for our for this style.
Yeah, we'll keep drilling on those as we kind of supplement around the calendars and diagonals and some of that income side. We'll once we nail that down and keep, like I said, we're having some pretty good success on the other things, which we'll maybe reveal at some other point in time. Yeah, those have been really fun trading those last couple of weeks, and the hit rate is pretty sweet. So kind of ridiculous, to be honest. But we'll keep that as a little teaser and maybe talk about it at some other point in time as to how we're doing it. Maybe not exactly the mechanics of how we do it, but just the how the hit rate that we're getting on the percentage wise is pretty sweet. So
it's insane. It's been insane.
Yeah. Pretty good trade. It's pretty straightforward. There's not a lot of wild stuff happening here.
Yeah.
It's just a basic diagonal. There's nothing kind of crazy happening here. I will say this is different. This one does require margin. So it's on a 5. I mean, every lot you have in this, every single contract is worth 1,000 of margin. So this one has 5, so it's 5,000. So if you don't have margin abilities, then you probably can't do this diagonal. So just heads up, the calendars don't require margin, but if you're buying them, but the diagonals do require it. So there you go. Heads up on that.
Perfect. Well, I appreciate you coming on for another video, and I'm excited to see more videos down the road. And also, I don't know if you got to see the latest video that I uploaded. We had Poss trading on, and he's going to come back on Friday. So I just wanted to let you know.
Oh, sweet! We'll have to watch the video when he gets on there. I don't think I've seen it yet. So, yeah, is he a solid trader? What's the story with this dude?
He's just 2 stimulus checks, and he's just all gung ho. Like
Nice.
The amount of confidence that he has, it's he's only been trading since November, and I know at the beginning of this video you said it's been an insane like bull push since then. So
yeah, it's been a wild market,
and
I think that's the hardest part in trading, in my opinion, is whenever the market changes characteristics from whatever its current personality is to whatever the next personality is going to be. That is where you have the most problems in trading in general, is those transition periods. Because guess what? What was working don't work anymore, and you have to adapt to it. And most people end up not adapting fast enough, and they get beat up pretty good in that transition. So I don't have to think we're necessarily there right now, but we're getting closer and closer and closer to the time where we transition out of a straight up running market. But there you go.
Cool. Awesome. A comment below, and then also give a thank you to Halcyon for joining us again. If you guys want to leave a little emote or anything, but all the likes, all the comments, all that helps to get more views on the video, and I'll donate half the ad revenue from this video. So I'm really excited, and thanks for coming on for another one, Halcyon.
You got it, man. Take care, Logan.
Cool. All right. See you guys later.